Meanwhile, it was a tough week for big bank earnings this week. Goldman Sachs and Bank of America both wowing the street with strong quarterly results, while J.P. Morgan missed on both the top and the bottom line. Morgan Stanley, another big disappointment, revenue falling short of analysts' expectations. It moved the stock as well. Morgan Stanley's chief executive, James Gorman, did assure investors that, quote, "We do not believe the fourth quarter is the new normal." He talked about the volatility in markets being a big issue. Now to my next guest we go for reaction. Rafferty Capital Markets chief financial strategist Dick Bove is with me this weekend. And Dick, it is always a pleasure to see you. Thanks so much for joining me.
Thank you, Maria.
Assess the situation for us. There was a lot of mixed stories within the banks. How did you see it?
Well, I think if you start to break it down product line by product line, it gets a lot easier to understand. I think the most important product that a bank sells is its loans, and loan volume was actually reasonably good in every one of the companies that reported in the past few days. So I think that if that's where the core earnings come from this industry, that's looking good. The capital markets part of the industry did not well at all. Particularly bad was what happened with the trading of bonds and the underwriting in bonds. But, you know, you have to believe, given the amount of debt outstanding in the United States and in the world, we're talking about trillions and trillions of dollars. You know, all that stuff is going to roll over. All that stuff has to be traded. So whatever the glitch was in the fourth quarter, I think will be evened out as we go through 2019. And I think the other area that wasn't doing that well was investment banking. But again, if we get a decent market going forward, investment banking should have an incredibly strong year, given the fact that we have these huge IPOs coming to market, number one. And number two, there should be a significant uptick in mergers and acquisitions.
Yeah, really important point. You've got things like Uber, Slack, Pinterest, Lyft, all coming to market this year, 2019. Maybe they sit it out for the first quarter, but many of them have made filings, so we are expecting that to happen. And I guess no surprise that capital markets were the issue for a number of these companies, because we had incredible volatility at the end of the year. And you and I spoke about this when you joined me on the morning show this past week, that there was no high-yield debt issuance at all in the month of December.
Well, that's right, and that's because I think the Federal Reserve was extraordinarily tight. In other words, if you go to the middle of 2018, you know, money supply was only growing at 3.7, 3.8% year over year, and the Fed was shrinking its balance sheet, and of course, there were a couple of interest rates ahead, you know, if you were in the middle of last year. Now, the Fed has shut down, and by that I mean they're not shrinking the balance sheet anywhere near as rapidly as they had projected. Number one. Number two, money supply has now been ramped up to grow at 5%, you know, and, you know, I doubt that we're going to see any significant interest rate increases in 2019. So, you know, if you're dealing with a tight situation where there's not a lot of money being generated, you know, you're not going to sell a lot of bonds. But if you're backing away from that, and I think the president here was absolutely correct, if you're backing away from that, then basically I think the game is on again in this coming year.
I mean, you make a good point on the Federal Reserve. They sort of pivoted for the markets. I mean, not for the markets, but they pivoted and basically said to us, we're on hold or we're pausing, you know, until we see the data that will dictate what happens next. How many rate hikes do you expect? And I guess, Dick, one worry for this market has been the unwind of the balance sheet. We're talking about a $4.5 trillion balance sheet. They told us or suggested they would be selling $50 to $60 billion in securities every month. Do you think that's going to be on track, or might they pull that back? I have a suspicion that that's one of the reasons for the volatility at the end of the year, that balance sheet unwind.
Oh, yeah, no, I think you're definitely correct. The Fed, laid out a program in, I think it was September of 2017, indicating exactly what they were going to do. And they adhered to it relatively well up until October, November. Then they started pulling back. And in my view, they're definitely not going to be selling $50 to $60 billion worth of securities every month, and they haven't been for the last couple of months. So, you know, you know, if we go back in history, no one ever thought that the Fed should be independent. It took 6 years to convince Congress to allow the Fed to exist, and it was only with the promise that it wouldn't be independent. No presidents from the end of World War II up to, Clinton wanted to see an independent Federal Reserve. And I think that the Fed, understands that if they don't have the political, the congressional, the public, behind them in these rate increases, they're not going to do them. And therefore, I don't see any possibility, really, that we'll see a rate hike for at least 6 to 9 months, and then it's questionable if it's going to happen after that also.
6 to 9 months. You think the Fed caves to the president, don't you?
Oh, I don't think there's any question about it. I think that one by one, these guys have swung, recognizing that the Fed can't take that type of negative publicity on a constant basis from someone of that stature. They just can't take it. So they caved.
Well,
what's
your assessment of the economy, Dick? I mean, the banks are very tied to what happens in end market demand. You just said loan demand wasn't all that bad. And we're looking at an economy with expectations that we're going to see a slowdown. So do you think we're going to see a recession or a slowdown in 19 or 20 or beyond?
Well, I got to tell you, it's nerve-wracking to see, General Motors, Tesla, State Street Bank, other companies continuing to announce these layoffs. I mean, layoffs are not a good sign if you're thinking about an economy which is going to ramp up and do well. But I think you have some pretty strong drivers on the other side, too. I mean, there are a lot of people working. Wages are going up. Businesses were borrowing money for new capital plans up until, the government shutdown. So I think if we can get through this next quarter without any major damage being done, if we get a deal with China, if we get, the government up and operating the way it's supposed to be, then I think, you've got too many sources of growth, percolating below the, if you will, the seams, which would suggest that this could be a very good year.
Well, I know it was a tough year for the bank stocks in 2018, but we're seeing a bit of a stabilization so far. If you had to put money to work in this group, where are the banks that you would find opportunity? What do you want to buy here or sell?
Well, I think Bank of America, as we've discussed before, had an extraordinarily good quarter. I think that this guy, Brian Moynihan, is proving to be, a very, very capable leader of his company. And I think what he's achieved over the last, 10 years or 5 or 6 years, if you want to say, has been remarkable. He's taken a company which was effectively, going into bankruptcy, and he's turned it around into a company which is growing more rapidly than its industry, which has got tremendous cost control, where the margins are benefiting from the increases in interest rates, and he's hired all these people to go out and sell something now. So I think Bank of America is definitely something that should be bought. If we're going to see a solution in this trade, war, Citigroup will benefit. I mean, Citigroup cratered, in December, basically, I think, on fear that there was going to be some sort of trade disruption, because Citigroup is truly our only really international bank, and Citigroup supposedly is the biggest, issuer of trade finance in the world. The French banks are up there also, but I think Citigroup is number one. So if you have any break in the trade negotiations, you really do want to take a look at Citigroup.
Dick, it's good to see you this weekend. Thanks so much.